Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I'm going to take a break from my series on Jesse Livermore just because there's so many teachable moments right now at this place in history in the markets with the methodology. And we've been sitting on our hands for a tremendous amount of time, and finally all that patience is beginning to pay off. And that'll make a lot more sense in just 1 minute. So we have a lot of teachable moments. I'm going to take a break away from Livermore just because there's not enough time to do Mr. Livermore justice this week. And I think it's more important that we focus on the methodology. Make hay while the sun's shining, so to speak. There are some secrets to trading, and don't get too excited. They're not huge secrets, just little things like patience is one of the probably biggest secrets there. Stick it to a methodology, and I'll flesh it out. I'll flesh all that out in just 1 second. Possibly the only setup you'll ever need. And again, that'll make sense in just 1 second. I have a mystery chart, a new mystery chart plus a reveal. By the way, housekeeping, I do take requests. It makes my job a lot easier. You can send them to davelandry.com/contact. I also do a live webinar most Thursday nights at 6 Central, 7 Eastern. Would love to have you there live. Go to davelandry.com/webinar. Register for one, and you're registered for all. My YouTube is at Dave Landry. You can go to youtube.com/Dave Landry, or once on YouTube, at Dave Landry, and Twitter is at TFollowingMoron. Should you need to reach me, davelandry.com/contact. And if you want the slides from this presentation and all the other presentations combined, go to davelandry.com/StockCharts. All right, let's jump into the methodology and action and the mystery charts. We've got a lot to discuss this week, thank goodness, because it's been pretty choppy for a long time, and we're finally starting to reap the fruits of our labor, mostly sitting on our hands, and we'll talk about that in just 1 second. Here's the mystery chart for this week. This is a setup I am currently looking to buy. You can see it made a nice thrust higher and has subsequently pulled back. This is an IPO for this first pullback pattern. I like when they come public and die out a little bit and then take off again, and then look to play that first pullback. Now, here are your parameters. Entry of 45.20, stop at 38.50 for an IPT of 51.90, risk of 670. Let's take a look at this on the chart. There's your entry, there's your stop, and your IPT is up here. Now, those familiar with my IPO work will recognize that this was technically a buy at B setup. Now, buy at B, you buy on a new closing high, and you buy market on close. So technically, this close right here would have been a buy at B because it's a new closing high, all-time closing high for the IPO. However, when day one sets the high for the week, it also has to close above that high. So let's take a look at that. So the entry would have been right here. However, I have what's called the $30 rule, which used to be the $20 rule, but in more recent years, I've bumped it up a little bit to 30. And I've found that in general, those that really take off tend to be less than $20 a share. Now, they also tend to be more than $5 a share. And if you go in and watch some of the older shows on IPOs or go to my website, davelandry.com, you can find a lot more about IPO trading there. Anyway, nice little first pullback here. I think this stock has potential. Now, one thing in addition to show you, notice that it has a lot of bars in the pullback. I'm okay with that with an IPO, a little bit more lenient than I am with more established issues. Now, here's a mystery chart reveal. This is one we talked about in the last show, and it's SYM. Notice it had a nice thrust higher. It pulled back to the 30 EMA. And if you take a look at the illustrator below, the Landry lights, which is a free plugin, if you like this video, then go down and hit this little plugin right here, and you'll get the plugin for free, at least for now. Anyway, nice little Landry light pullback. This just tells you how many days the lows have been above the moving average, depending on what moving average you're working with. For the daily chart and stocks, I tend to like the 30 EMA. I also like the 30 EMA quite a bit in crypto. Anyway, there's the pullback to the exponential moving average. In this case, again, I'm using 30 days. And notice that the Landry light goes from green all the way down to 0 because there's no longer Landry light either upside or downside in the chart. So it's a great little pattern. It's one of my favorites. In fact, lately I've been getting asked about a lot of stocks that are kind of wide and loose and mediocre. And this is one in particular, gentleman, is a little newer to trading, a little newer to my methodology. And I would suggest that he just go in and trade stuff that's very, very obvious, just like these Landry-like pullbacks where you could scan for them or they're easy to recognize. All you need is 20 or so days of Landry light followed by a pullback to the exponential moving average. Entry is here, stop is down here, and then IPT is here. Now this one has triggered. And before we get into that, remember this one was previously a Landry light pullback. Notice that you had a nice trend here, nice Landry light down here. And it goes back to zero, so you look to buy if it begins to resume its trend higher. In this case, it did. And here's the closed out trades that we took on this one. Now, this is in my hypothetical spreadsheet, but I do actually take these trades, and I did actually take this trade. I think I did up with about 3,600 on this trade. I used a little discretion. I had a few more shares on, and I also took profits slightly early on the first half. Anyway, so from there to there was $1,000, and that's banked. And that's my hybrid approach to money management, where you transition from the shorter-term trader to the longer-term trader by taking half your shares off, getting your stop up to break even, and then hanging on for what hopefully turns on to a long, long ride. And we obviously also trail that stop higher as the market moves more and more in our favor, but we allow it to loosen up over time in order to hopefully ride out some of these bigger corrections. In this case, our stop was a little too tight because you can see we just barely kind of got stopped out on that, but it was much better than a poke in the eye type of trade. In fact, I would say it's a so long and thinks for all the fish. And if you go back to prior episodes, I've done some walkthroughs on this one. Anyway, so far so good, knock on wood. Let's start kissing each other just yet. I don't get too excited about a position until and unless I'm free rolling on it. And as I've said quite a bit, free rolling is the secret to trading success. And that's the idea behind the hybrid approach to money management. Now, one other point too, I'm kind of harping on the money management. You also want to make sure you have really, really good stock selection. If you go back and watch the presentations that I've done on this SYM previously, you'll notice that I talked about this gradual uptrend followed by an accelerated uptrend, nice Landry light, nice little deep pullback right into that 30 EMA. So it had a lot working for it in addition to all those things, and in addition to acceleration. It also had nice persistency. That means it tends to go up day after day after day. Okay, now here's the thing. So that's SYM. We were just long SYM. We made $3,500 in it, and now we're going back to the well. Psychologically, this can be pretty tough. And obviously, and especially if you subsequently lose. So you made all this money on a trade, and then you go in and give a bunch of it back when the next trade doesn't work. And the bottom line of trading is you have to make decisions, and more importantly, you have to learn how to live with them. So the bottom line is you have to treat every setup as if it is a standalone setup. If you were just seeing this setup today, would you take it? And I guess the more important question is, should you take it? So you want to treat it as if you were seeing it for the first time. Again, if you just saw this setup, would you take it or should you take it? Now, you got to be careful not to give it preferential treatment if it was a prior winner like this one was. And believe me, it's a little nerve-wracking going into a new trade, especially when you're recommending it for the whole world to see, or at least everybody in my trading service, to where you don't want to look like an idiot, but you also have to follow the system and do what the system tells you to do. Anyway, so you got to be careful not to give it preferential treatment like, oh, I just made some money in this stock. It's a good stock. I like this stock. Let's do it again. And on the flip side, you also have to be careful. Let's say you lost on the trade overall, but it subsequently sets up and looks fantastic. Then you have to take the trade. So it could be a little nerve-wracking, admittedly, going back after a trade that you just got out of. Okay, so last time I talked a little bit about potential dead money in Riot. So let's flesh that out a little bit further. And this was another stock from my trading service, and we'll take a look at that spreadsheet in just 1 minute. Anyway, we had a nice, and once again, accelerated trend higher. Notice the Landry light down below. Nice Landry light. Pull back to the EMA. Notice the Landry light goes from around 30, because we had about 30 bars in here, or exactly 30 bars, whatever that number is, and then back to 0 as it pulls back. So I really like the looks of this setup. And again, notice the Landry light, 30, back to 0. So that creates, again, a Landry light pullback. And there's the parameters. Entry of 1210, stop at 850, IPT of 1570 for a risk of 3.60 points. So entry's here, stop is down here, IPT is up here. Now notice that it triggered an entry and just pretty much went sideways. So the question always comes up, Dave, we've been in this thing for 2 months. We're breaking even, or worse, we're at a loss. Why don't we just bail out? You can always get back in, right? Well, getting back in is a lot tougher than it seems. And let's say this thing gaps open 4 points tomorrow. Not that it likely will, but it could. And if you're not in for the ride, then you miss it. And you could end up chasing it one way or the other. Now, let's take a look at what happened. It subsequently began to rally. And remember, we're taking half our profits at the initial profit target, exiting half of the shares. So it's $1,000 banked. And just a few minutes ago, today is Tuesday, July 11th, somewhere around noon my time, it was trading at $17.31. So based on that, you had $1,447 in open profits. So we add all that up. So far, the trade's at $24.47. Now, this is based on a hypothetical 100K accounts to make the math easy. So that's a 2.4%, almost 2.5% gain overall on your accounts. If your account is bigger, then obviously it would be much bigger. And I do take these trades, and I do have a model account, and I'll show you these trades as I take them. But I did take this one and profit nicely so far. So this one is not dead yet. So this is my take on whether or not you should stick to a position. And I believe you should put your plan into place and then follow that plan. If you decide to get out because things aren't working, there's a chance that your timing might have been a little bit off, and then the market decides to take off without you. Longer term, following the plan is the way to go. Yes, if this thing could have stopped out after 2 months of being underwater, that could be frustrating too, believe me, but it's a lot more demoralizing to miss a big winner that you sat in for a couple of weeks and decided to bail out on than it is to receive a loss on a trade. For me, if I get a loss on a trade, I'm like, I drop an F-bomb and I move on. But when I miss a big winner, I get very angry. I don't know if you're like me, but I hate missing a big winner. It really frustrates me. Okay, now, along the lines of the methodology and action, Tom Petty got it right. The waiting is the hardest part. And in prior presentations, I went in and I showed where we've had periods of time throughout history. I haven't added up this last choppy period. But I know in the past we've gone 50-something days from one setup to the next. Now, we had setups in between, but a lot of those didn't trigger due to conditions. So after a while, you could get pretty bored as a trend follower waiting for the next trend to come along. So I received this email on May 2nd. I decided I wanted to cancel membership. I have learned a lot from your service, but at this time I want to try a different service. Thanks, Rick. Well, the next day I woke up, I read that email the night before, and the next day I woke up thinking, and I emailed Rick and said, I woke up thinking that the next guy with a different service is going to look like a genius if he's a trend follower. We're due for some big winners / the market's due to trend again. Now, I tend to bore my clients to death, and believe me, I get bored to death too because I'm looking for action too. But a lot of times, the best action is no action if you're a trend follower and there's no trend happening. And as I've said 1,000 times before, many years ago, I was part of one of the first financial websites out there. And when I had a trading service back then, this is where my trading service actually came from. Kind of by accident, I kind of ended up in the retail side of the business after starting on the institutional side. That's a 2-drink minimum. But anyway, and if any institution wants me back, I'll be happy to go. So where am I going with this? Well, the bottom line is, way back in the day when they had salesmen who were selling my service, whenever I would stop recommending stocks because there was nothing to do but wait, I would get phone calls from them saying, Dave, you've got to recommend something. We're losing clients. And I know I've told the story 1,000 times, but anyway, just to beat the dead horse a little more, what was interesting was when my picks weren't working out, in other words, I was losing money as opposed to just sitting on my hands and telling everybody to wait, we wouldn't really lose that many clients. And that told me right there that people were craving the action more than they were craving success, or they wanted action, they wanted something to do a lot more than they wanted to be successful. And being successful a lot of times is just sitting on your hands. Anyway, long story endless. The portfolio on 5/2 for 5/3, when I received the email, and I sent this the morning of 5/3, we had one stock in the portfolio, and that was Riot, and you can see it was underwater by $233. And we had one setup, SYM, as the new setup. And if you go back to May, you might see this stock as possibly a mystery chart. Anyway, most of my mystery charts, or almost all of them, I should say, come directly from my trading service. So here's how the trade closed out, $3,500 gain. Now, I took this portfolio snapshot on Monday, July 10th, around midday, and here's where we were. So we were at 233 loss on 5/2/23, and we made 3,500 on the sim. And if you look at that swing from minus 233 to 3,500, that equals $3,733. Now, notice below in the portfolio we have SIM. This is actually a new trade, and this was a mystery chart. This was the mystery chart we just talked about as going back to the well, so to speak. So that's not the old SIM. This is the new SIM. Anyway, you can see open portfolio as of yesterday, knock on wood because it changes quickly, believe me, was 44.57. So if we add that to the 37.33, that is an $8,190 swing. Now, keep in mind that everything is based on a hypothetical 100K account. And again, I do take these actual trades. So, based on that, this would be an 8.1% gain in 2 months and change. That's a pretty good return. If I could do that all the time, you'd never see my fat arse again. I'm half kidding. I would come back and taunt you a second time. Anyway, if you want to see these trades, the archives of these trades, you could go to davelandry.com/archives. And then if you want to see them live, you can go to davelandry.com/trading service. As part of my website in the courses, I have submit a trade where you can go in and you can submit a trade and give me the parameters, and I'll follow up with that and give you my 2 cents on it. In more recent times, a lot of these have been covered in Facebook. In fact, that's where I actually do the posting on these in my Facebook group. And based on the last questions that I received on the last 4 stocks, I got to thinking about it. Maybe the secret to stock selection for the new trader, or for those new to my methodology, might just be one simple pattern. Now, I've done a course on stock selection, and it took me 14 hours to cover everything that I thought needed to be covered. But I think there's a lot of simple things you can do while you're in the learning phase, or switching over to a trend following methodology like mine. Now, this gentleman sent me this stock as a possible short. Notice that it's kind of wide and loose and all over the place. It is also a foreign stock, or trades overseas. So there's a lot of little gaps in here, which kind of makes it a little tough to do the technical analysis on. It probably would look a little bit better in its native market. But anyway, it already had this huge gap down. If you're trying to catch a transitional pattern, a rollover, like a bow tie or a first thrust, you want to get in before it has such a huge gap. So that one I would have passed on. Notice that this stock here has a big gap down way back here. Now I know that's a ways up there, but markets have long memories. And also there's a lot of overhead supply. So there's no setup here just yet other than it's bottoming out. And it could form a bow tie setup. All it needs is a lower. That would be an okay looking setup. But you have to look at it bigger picture, and there's just a lot of overhead supply to deal with. Remember, the bars reflect the actions of the participants, so you've got a lot of supply to deal with back here. Now, here's another one. Once again, it's kind of gappy in here, and I believe he was bullish on this one. But notice it does have a lot of big gaps that are even big for a stock that trades overseas. Notice that this run here is below the previous high, so you could end up with a double top situation. So it's just not a fantastic looking chart. Now, all of this has me thinking, especially with recent action, is that the secret to stock selection, if you're new to trading, that is, or new to my methodology, would be just to trade one setup. Now, Linda Raschke once said, all you need is one pattern to be successful. And I truly believe that Linda is right. So find one simple setup, research the heck out of it, find as many examples as you can. Find 100 examples, ideally. Some that work, some that didn't. See which ones tend to work a little better than others. Also, gauge the market conditions based on the setup and see how it works out in bull markets and bear, etc. And of course, trade it. Until you actually trade it, you won't know how it actually works. Now, kind of interesting times in the portfolio. The Riot was a Landry-like pullback. BT was almost a Landry-like pullback, and I'll show you that in just one second. QBTS was a Landry-like pullback. SYM was a Landry-like pullback. The previous trade in SYM, which made $3,500, was also a Landry-like pullback. And this EOSE is a TKO. Now, let's take a look at some of these. Here's a SIM. Again, the prior trade was a Landry-like pullback. And if you go into prior episodes, you can see where I talked about that one. The current trade is also a Landry-like pullback. Notice that you've got the nice Landry-like down below, meaning that the lows are greater than the moving average. It pulls back to the moving average. Landry-like goes to 0. And there's your setup. Now, EOSE had nice Landry-like, as you can see, lows greater than the moving average. And in this case, it's set up as a TKO, trend knockout. And again, if you go in and watch prior presentations, you'll find a lot on that. Also, you find a lot, obviously, on my website, davelandry.com. Now, BTBT, not quite a Landry-like pullback, but you kind of get the idea. It was close. It was a net eyelash off of the EMA. Now, this is a great example. Let's say I was only trading this pattern, and this is my only pattern that I traded, only setup that I traded. Then I'd say, well, I'm going to have to pass because it didn't quite touch that 30-day EMA. But it's a good-looking pullback, and I do trade pullbacks. So I think it's a pretty good-looking setup. I don't think you should split hairs when it comes to setups, but if you're newer to trading, then yes, maybe trade in more of a mechanical standpoint. So this was a pattern I call a TKO, and it was almost a Landry-like pullback. Here's the Riot again. As you can see, nice Landry-like, lows greater than the EMA. Another Landry-like pullback. QBTS, another Landry-like pullback. Nice accelerated uptrend, followed by a pullback to the 30 EMA. So as you can see, you can be quite successful with just one simple pattern, especially if you exercise some patience, as we discussed earlier. Well, that's all my time for this week. In coming weeks, we'll get back on the Livermore series, unless, of course, the market provides us with a lot of teachable moments, and hopefully it will. Anyway, if you need to reach me, davelandry.com/contact. If you want slides from this presentation and all the other presentations combined, along with a bunch of other goodies, including both of my books in PDF format, go to davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. There's my Twitter handle, and I'm at Dave Landry on YouTube. And join me weekly for Dave Landry's The Week in Charts. davelandry.com/webinar for that. So thanks again for watching, and may the trend be with you.